Jassy, Steph, characterizes it as the age-old Amazon story, which is the choice between optimizing for short-term profits versus what's best for our customers in terms of the cost that they are about to incur. He also points out 39% growth in AWS, which is, of course, their cloud business and a profit machine, which does show that is still kicking into high gear after Microsoft showed some strong cloud strength. What do you make of it?
Yeah, so we headed into the print. Stock was only up 6% in the year. It was a laggard, as Deirdre said, because there were concerns about e-commerce slowing down, very difficult comparisons, and an investment cycle, right? They're having higher spend. They have to spend on wages. They have to spend on people. They have to spend on the supply chain and logistics. So they're not immune, right? And they're going to spend, and that's what they should do. But that's why the stock has lagged. On the positive side, those are great AWS numbers. They really are. I was thinking 35%. They did 37 last quarter, and I think the whispers were 35-ish. So 39% growth, that is terrific. They are so much bigger than Microsoft and also Alphabet in terms of the cloud business. So this is really encouraging to see. We know that Microsoft grew Azure at 48% and Alphabet at 45%. So this is right up there with them, too. And again, as I mentioned, they're much bigger. So I think it's going to be fine. I think we have to get through this quarter or maybe even next quarter. Maybe it's the 2022 story as the investment spend starts to subside.
Delano, your take?
I would echo the rest of the panel here. I think the big thing I was looking for is the offsetting of AWS growth versus some of the challenges they might be facing in the e-commerce business. I do think the e-commerce story does come back over the holidays and past into 2022. So I think that's something to focus on. So investors may see an opportunity here. But yeah, the numbers for AWS is a strong suit here. It's obviously not offsetting what's happened in extended hours after the print. But that was kind of the big opportunity I was looking for. They guided in last quarter, they guided lower on revenue. They kind of said on the low end, they might look at $106 billion. So this miss versus the street is obviously disappointing for investors. But, we were kind of expecting something slower on the side of just overall top end revenue. But I think in general, I'm going to be looking at AWS numbers as well as how e-commerce can rebound looking over the holidays, Wolf.